We will have our last lightning talk. So I welcome Mr. Kim Pessala, who is the Chief Investment Officer at Evli Bank. And he will be today giving advice to startups after they receive their first investment. So young startups, please take notes. So Mr. Kim, welcome.
Hello everybody. My name is Kim Pessala and I work in Evli. I'm there as an investment officer. I have been working in the investment area for over 20 years, and I have seen many ups and many down markets. But what we have seen the last 4 years is something totally different. It's a new normal out there, and we have a big lack of trust. I'm going to start by reading a quote. Quote, "The budget should be balanced. The treasury should be refilled. Public debt should be reduced. And the arrogance of officialdom should be controlled and tempered." Who do you think said these quotes? Chairman of Fed, Ben Bernanke, or his colleagues in Europe, Mario Draghi, giving some good advices to the EU politicians trying to fix this mess we are in? No, this was said long time ago, thousands of years ago, by a great philosopher, Cicero, 55 before Christus. Already at that time he knew that the economy moves by big credit cycles. And this big credit cycle, it lasts about 70 years. And you can divide it in 50 years of credit expansion. And then comes the hard part, when you have to get the credit away. And if we look where we are today in this new normal, this is unfortunately the phase where we are. We are in a decade long of delivering. And we will at least be for another 10 years in the environment that we just have simply too much debt. In this chart, we see the debt level in US, and we see that before the Great Depression in 1930s, it was at the level about 250% of GDP. Today, there is $52,000 billion of debt in US. That is 350% of the GDP. It's actually the same number in Finland. If you look on France, it's 400, UK is 500, Holland is 700, Ireland, over 1,000. Wherever we look, we just have too much debt. And we can see that the delivering process has already started. How do we get the debt levels down? Well, by paying back debt, by transferring assets from those that have to those that haven't, by bankruptcy, default, and by monetizing debt. Now in Earth you're going to think that, well, why is this important for me? Well, this shapes the environment, the financial environment we are living in for the next at least 10 years. And this is a different environment that we have been used to live in. In this environment we have fat tails. It means that events like 2008, which shouldn't have statistically happened, they do happen. And they do happen much more often. And we cannot exclude that we would see a similar kind of event like in 2008 again. In this kind of environment, when we are delevering, the business cycles, they are very impulsive, they are much shorter, might be much stronger. And also in this environment, we might well have a good year in the stock market just to give all the return back next year. One symptom of this is this chart. We have 500-year low in long government bond yields. This chart is from the Netherlands, 500-year low. If you look in Germany, investors who buy 2-year government bonds, they are literally paying for that because the interest rates are at negative level, this is just a symptom that everything is not right. Many of you great startup companies have managed to raise the first million or 5 million or 10 million. And now we are thinking that, okay, I have my great business and now I have this cash. I don't need it yet, but how should I manage it? Or how should I preserve the cash reserve? Well, one thing is, in this environment, when debt levels are taken down and we have a lot of mini crises, there is nothing that is riskless. That's the good starting point, that when whatever you think of, there is risk. We thought earlier that government bonds were pretty riskless. Today we know that that is not the case. We shouldn't put all our assets in one bank, because if we have a financial crisis again, bank will be under a lot of stress again. And we don't know which bank that will affect. And if we have all our assets in just one bank account, we have 100% exposure to that bank. And yes, there is the deposit insurance, but hey, that covers the first 100,000. So it doesn't really help us a lot. We shouldn't put our money into something that is very complicated or we don't understand. It should be transparent in that sense that we know where we have invested our monies, and it should be very liquid. No strange structures. If we work in the euro area, we like to have it in the euro area. We don't speculate with currencies, because that is the most difficult game on earth, to speculate in currencies. And maybe in this delevering, when the central banks are pumping trillions of money into the system, we might have pretty high inflation. But hey, we don't try to even get as high return with the cash reserve as the inflation. We will probably have a negative real return. But it doesn't matter, because the only thing we want is to have the cash reserve safe, because the return you're gonna do with your business, and that's where the return will come from. So what do we then recommend? Well, we recommend something which is very diversified in many assets, something that is supervised by financial authorities, and where the structure protects the investor from bankruptcy. A plain usage for fund regulated by EU standards. 2008 financial crisis, all well-rated, well-managed money market funds survived well. But if I would have to put my money somewhere and I knew there would be a crisis, I would always have it very high on the list. And I wouldn't put the assets in just a single bank account. I will end up with a couple words about the outlook and the growth. And yes, I know people come to me and say, Kim, why are you so negative? Well, it's true. I am pretty negative. And the reason for that is that I've been studying the history when we are in similar situations. And when we look on the facts, I don't see that this will end soon, this delevering phase. So, financial investments, I'm negative at least the next 3 years. I think we will have good markets up, but then we will give the return back and come down. A very difficult market conditions. When we talk about growth, I'm mostly negative. But when we talk about growth, there is two sources. One is the credit expansion. And we know that's dead, so that's a big headwind. But the thing I'm really optimistic and positive about, that is the other part of source. That is the productivity, the innovation part, all this slush momentum that we are seeing. During crisis, innovation gets much more power. And legislation is done so that it would be easier for startup companies to grow. Even the politicians know that this is the best source of growth. And we can see this happen. These 2 days of Slush is a good example of this. And on top of that, at the moment, The world is drowning in liquidity. It doesn't know where to go, the liquidity. And I'm gonna bet you that a lot of this liquidity will find its way to good new growth up companies. And the venture cap will also have a good and great time ahead. So, thank you for innovating and helping the future growth. Thank you.